The company being analyzed today is Chandan Healthcare Limited. This is a company which carries out diagnostic tests, that is, tests to find which disease you may have. So, today we're going to analyze the company's financials, what it actually does, and its future expansion plus growth plans. So, let us start. First, we can see a market capitalization of 729 crores, so not the biggest company. Current price of one share is 298 rupees. You can see the price to earnings ratio is 26.9 times. The ROE, return on equity, and the ROCE, that is return on capital employed, are high and nice. Book value per share, that is net asset value per share, is 56.5 rupees. Now, here we have the total income, okay, the financials of the company. First, let's go to the left hand side. We have the total income in crores. You can see in crores, and here we have the growth. So, in fiscal year 2023, the company's revenue was 137 crores. This rose to 177.8 crores the next year. And in fiscal year 2025, the company's total income, that is revenue, was 232.17 crores. Then comes the EBITDA, earnings before interest, taxes, depreciation, and amortization. And this percent you see, this green line, it's the EBITDA margin. So EBITDA grew from 9.5 crores in fiscal year 2023 with only a 6.9% EBITDA margin to then growing to 43.38 crores of EBITDA in fiscal year 25, 18.6% EBITDA margin. You can see EBITDA basically almost 5x in a couple of years. Then we see the profit after tax and the profit after tax margin. The percentage is the margin. In fiscal year 2023, 3.3 crores of profit after tax, 2.4% profit after tax margin, rising all the way to 22.17 crores, almost 10x profit after tax in the last 2 years, and 9.6% profit after tax margin, almost double digit. Very nice. Here we have the at the left hand side, upward left, we have return on equity, return on capital employed. Fiscal year 2025, very, very high, nice 27% return on equity, 29% return on capital employed. Then we come to the upward right side. We see the earnings per share, the yellow one being around 10.79 rupees in fiscal year 25. Not the biggest rise in like from fiscal year 2024, fiscal year 25, which can indicate dilution occurring, and book value per share growing to 50.14 rupees. Nice. Debt to equity ratio, lower this number, the better. So it seems after they had their IPO, they must have paid a lot of the debt. And of course, their size almost also rose, their profitability also rose. Then interest coverage ratio, 7.95 times, very healthy. The larger this metric, the better. But even if this goes down to 6 or like 7, even 5, that is very, very healthy. Interest coverage ratio, that is. Chandan at a glance. Now, what does the company actually do? Let us read. Chandan Healthcare Limited is one of the leading North India based provider of diagnostic and pharmacy services. So, North India based location, North India. It is not owning hospitals. What is it doing? Diagnostic services and pharmacy services, and a key entity within the Chandan Group. Now, the company offers various pathology and radiology solutions across Uttar Pradesh and Uttarakhand. So, Uttar Pradesh, Uttarakhand, diagnostic services, finding out which disease you're having, a number of tests to find out which disease you're having, where you may be having that disease. So, pathology and radiology are different things which cover those things. What disease you may have, are you good, and where the disease is located, like where is the tumor located? Do you have a tumor? So, yeah. Its service portfolio includes a wide range of diagnostic tests, such as blood tests, X rays, ECG, ultrasound, CT scan, MRI. All these things they come under pathology plus radiology. Now, this is important. Chandan operates through a diverse business model. One is B2C, directly to customers. So people will come in and see tests. Then is B2B, institutional partnerships. Okay, partnering with hospitals. They will partner with hospitals. The hospital patients will go to Chandan. Okay, will go to the Chandan to get their tests done. Okay, that is the B2B partnership. They will have their labs inside the hospitals of their partners. Then comes B2G, business to government, government, public, private partnership contracts, all under the company owned model. So the government has some, you can say, scheme to get a lot of tests done for like public health. So Chandan and government will partner up. The government will get Chandan paid for this partnership, of course. And yeah, to capture rising demand across urban and semi-urban markets, Chandan is actively expanding into neighboring states. Currently, two states, Uttarakhand, Uttar Pradesh, but it's expanding to Delhi, Rajasthan, and many other places. Strategic focus on metro hubs and tier 2, tier 3 cities. Now, let's move on. Okay, 5 minutes here, over 5 minutes. 20 years experience, 360 collection centers, 40 diagnostic centers, currently present across four states. Okay, 35 cities. So, four states they're present in, two states is the legacy one. So, these new two states must have been very new. 18.21 lakh customers or patients came to their like have tests in fiscal year 25. 53.98 lakh plus tests were conducted, diagnostic tests were conducted, 236 radiology tests were offered, and in the H1 of first half of fiscal year 2026, that is quarter 1 plus quarter 2, they produce 137 crores of revenue, and see, profit after tax is 15.6 crores, is more than 10%. Remember fiscal year 25, profit after tax margin was 9.6%. It was 9.6%. Right now, profit after tax margin has reached more than 10%. So company is growing more and more profitable. We will discuss that. Now, where is the money coming from? So in fiscal year 2025, out of their total revenue, 41.4% came from pathology tests, 12.08% came from radiology tests, and 45.9% came from pharmacy. What is pharmacy? They have their own centers where they can sell drugs to customers. All right, they can sell FMCG goods to customers. Basically, mostly medicine, but FMCG goods are also there, like pharmacy centers. All right, you go to a pharmacy, you get drugs and all of that. So they have their own pharmacies too. This is, remember, pharmacy is a very important model, but they want to shift more and more to diagnostic. So diagnostic is the, you can say, number one priority, but pharmacy is important. It's very important. Now, balanced business model across retail, government, and institutions. In fiscal year 2025, you can see here, 58.78% of revenue came from this. B2C, direct patients, 18 lakh plus patients served. Then 18.42% revenue came from institutional clients, 230 plus private hospitals and clinics were as partners. Okay. Then B2G, like government public private partnerships. See, diagnostic services in government hospitals. These are long term contracts ensuring stable cash flow and credibility, 22.8% of revenue. So you can see where is the money coming from? Directly, mostly patients. Now, top performing centers across all categories. So it seems they have three categories of centers: large, medium, small. Okay. We have 13 large centers, the top one being Ayodhya, Ayodhya Center. Revenue of 8.43 crores. I think that's pronounced as Rikap Punch. I guess so. Then we have six medium centers, and we can see what facilities they are providing. Top performing medium center was Lucknow, providing 8.93 crores. Wow, the medium center outperformed the Ayodhya, the large performing center. 55,000 customers served, 85,000 customers served. Then 21 small centers. This is the basic healthcare without like MRI, CTs. Okay. In Haldwani, 2.3 crores of revenue, 25,000 plus customers served. Okay. So three kinds of customers, sorry, centers. State-wise revenue. So Uttarakhand, Uttar Pradesh, Rajasthan. I hope that's Rajasthan. I think that is Bihar, and I've forgotten which state this is. So these are the places where they are currently present. And state-wise revenue, 71% of revenue came from Uttar Pradesh, is green one, 29% of revenue came from Uttarakhand. So yeah, now expanding footprint across India. These are their kind of their future growth plans. Okay, these are very important. First, network expansion plans. This is going to be good. Targeting a network of 100 labs across 17 states over the next 3 years, expanding presence to 1,000 franchises in the next 3 years. Now, it would be very useful to find out what is the average revenue per lab, average revenue per franchise. So, do read the reports and try to find out that. But big expansion for their diagnostic labs and then franchises, which I guess I'm not exactly sure what franchises mean. Does it mean like partnerships? Does it mean pharmacies? So I'm not exactly sure. Strategic partnership with Jeena Sikho Life Care. Now, Chandan Healthcare is to be the exclusive diagnostic partner for Jeena Sikho Lifescale Limited across 23 states and 100 plus cities. This is going to provide some big revenues, very profitable revenues, and we have a segment covering just this a few minutes later in the video. Expansion highlights. They're moving into new states, Delhi, Madhya Pradesh, Chhattisgarh. They're strengthening presence across their existing markets like Uttarakhand and Uttar Pradesh and NCR, and they're focusing on their diagnostic gaps in their mid-sized cities and suburban areas. Then they're having their own medical centers. They're planning 20 new Chandan medical centers annually under structured long-term strategy, expanding affordable quality diagnostics across underserved regions. So Chandan medical centers, more labs, more franchises, an exclusive partnership with a big Jeena Sikho in Life Care Limited, and going into new states. So these are a summary of their plans. They have some big plans, okay? They're aiming for some big growth. Now, the diagnostic centers overview will just look at the projected growth rates. So diagnostic center in India is expected to grow from 13 billion US dollars in fiscal year 2023 to 25 billion dollars by fiscal year 2028. 14 CAGR, 14% CAGR, fast growth segment. Then pathology is 58% of diagnostics, currently valued at 7.5 billion, expected to reach 14.4 billion. So expected to grow even faster. So pathology is going to be nice. Or around the same actually, around the same. And radiology segment projected to reach $11 billion by fiscal year 28. And if you're wondering pathology and radiology difference, one of them is that it comprises this. Radiology means X-rays, ultrasound, and this CTs, MRIs. They're trying to find where the abnormality, like a tumor, where is the tumor? And pathology is finding if you have a tumor, like checking your blood to find which disease you have, while radiology will tell you where is that disease, where is the abnormality. Now, con calls or earnings conference call analysis. So first, we find out from the management themselves, their statements, revenue per patient is on average 650 rupees. In the corporate segment, it's a bit higher in corporate, but on average, it's 650 rupees per patient. That is revenue per patient they get. Now, even above, see this. Hold up. Yeah, see this. More or less, each segment has the same margins because the whole diagnostic business has set up like this. So in the diagnostic business, okay, in the diagnostic business, it can be B2C, it can be B2B, it can be B2G, it can be franchise. The margins are more or less the same. So across all things in diagnostics, margins are more or less the same. Then net profit and EBITDA is to grow 20 to 25%. So over the coming medium term, next few years, it is wanting, targeting to grow net profit and EBITDA by 20 to 25% every year. So one year grows 20 to 25%, next year grows 20 to 25%. After that, hopefully grows 20 to 25%. So you can see they're targeting for some pretty nice growth. Now, here are a few very hefty statements, heavy, paragraphs coming in. So first, they're expecting 25 to 50 crores a year from the Jeena Sikho business. All right, when the this partnership fully ramps up, fully scales up, all right, goes like nationwide, but 25 to 50 crores a year they're expecting in revenue, which is going to be massive considering the current size of Chandan Healthcare size. Now, read this, the thing under black. Let's start. This year, this first half we have achieved a 5.2% EBITDA margin in pharmacy. So in their pharmacy business, where they're selling, drugs, food, nutritional food, stuff like that to their pharmacy, the pharmacy business is the low profit margin business, 5.2% EBITDA, and it was 1.2 last year. So Pharmacy businesses pharmacy businesses EBITDA margin has grown from 1.2% last time to 5.2% in the first half, meaning first two quarters of fiscal year 26. There has been a big increase in the EBITDA margins for the pharmacy business. Now look at this. Our aim is to achieve nearly over 10% EBITDA in the next 6 months for the pharmacy business. Remember, pharmacy is a low margin business. Diagnostics is the profitable segment. So diagnostics very profitable, pharmacy is a less profitable. Now they're aiming to increase their profit margins of pharmacy business. Okay, aim is to achieve over 10% EBITDA next 6 months. Remember that. We have so many businesses in pharmacy. We have a B2G business, B2C business, B2B business. And in the same manner, we will achieve more than 10% EBITDA in the next few years. That is our aim. So even pharmacy is varied. Pharmacy has B2G, pharmacy has all these three. And again, the target, ambitious, yes, very nice. And finally, we have this big paragraph about the Jeena Sikho. So we will start from the left and go to the right. How will we do this? Let me make myself a bit bigger, and the letters above me, we will read. Thank you, sir. As far as Jeena Sikho is confirmed, we have a partnership for next 5 years. It is an exclusive partnership with Jeena Sikho. At the moment, they are having nearly 50 hospitals and 150 clinics. And of course, they have declared they are planning for 350 hospitals and clinics in the next 3 years. Apart from that, at the moment, we've already started taking collections from 34 places in 4 states. Collection of like data about diseases, like patients' data, of course. In Bihar, Patna, Uttarakhand, UP, and Delhi, it is just the beginning. All right. So in these 4 states, they have started taking collections. In last 10 days, we have started the collection. Our contract is that we have to do the test at the rate of what the city carries on average. So the rate at which the price, the cost at which a normal customer is on average charged in a city for like a diagnostic test, they're going to carry the test for the same price. Okay. That simply means the rate is the same what is prevailing in the market in that city. And this is the good one. What we are doing, we are giving 30% discount to Jeena Sikho patients. We are paying 20% to Jeena Sikho, and the remaining 50% we are retaining. And out of that 50%, we have a very handsome margin. We are having around 80% margin as far as margin is concerned. So they charge patients on average a normal rate as far as the city rate. Then for Jeena Sikho patients, 30% discount. Okay. So out of that normal rate, 30% discount, 20% they have to pay to Jeena Sikho for using their hospitals or for using their land or near their hospitals. See, they will be having, from what I understand, they will be having their diagnostic labs like on the premises there only. Okay, they don't have to acquire land, they don't have to rent land for this. Jeena Sikho hospitals or Jeena Sikho land on the premise, they will be having the diagnostic labs. So for that, they will be paying 20% to Jeena Sikho, and 50% of the money they will be retaining. And that 50%, they have a 80% profit margin. I believe EBITDA margin in that. Very, very profitable. Now, why do they have that? Just because we don't have to pay the rental, we don't have to pay the electricity bill if we are putting lab in their setup. But that is only at few places. Most of the places we are collecting the samples and doing in our own lab. Okay, they're just collecting samples, doing at their own lab. And even that, if they're collecting samples, they don't have to set up a big thing. They don't have to set up a lab. They just collect the samples, take it to their existing lab. If they need to expand, they will expand their existing labs, which I believe will be less expensive, more cheaper. It will be cheaper. It will be cheaper. And that is the contract with Jeena Sikho. It's a 30% discount to the patient and 20% to Jeena Sikho, and rest 50% we are having. And of the 50% money, we're having a very handsome 80% margin. So Jeena Sikho, 25 30 crores a year business, Very, very profitable is going to be B for them. That was it. That was Chandan Healthcare Limited. They're conducting diagnostics. So, yeah, that's the entire business. You can see profitability is growing a lot. They're hoping to grow 20 to 25% and hoping to expand their profit margins. From what I remember, the diagnostic business has like 34% EBITDA margin. Diagnostics 34%, uh, 1 point something percent was pharmacy fiscal year 25. So you blend them together, you get the 18.68%. On average, 18.68% of EBITDA margin. I believe as pharmacy is going to grow to 10%, they want it to go to 10%, and they want to have diagnostics 35% ish. That is the EBITDA margin they want to have for diagnostics. So you blend them together, you get a way higher profit margin. Also, with improving the pharmacy business diagnostics profit margin, that will of course lead to higher profits, like higher profit margin. They also want to have, from what I understand, increasing revenue from diagnostics. So a larger or slightly larger percentage of revenue coming from diagnostics plus the pharmacy business, their profit margins growing can lead to a double effect, a double positive on the overall profit margins of the company. So with nice revenue growth, they can come even better profit growth. So maybe this 20 to 25% guidance, the target that they have or the aspiration can be a bit conservative because they're expanding like new centers and they will maybe make a lot more revenue. If they can grow 20 25% revenues, they can hopefully grow profits at like higher than that. So let us see how Chandan Healthcare does in the future. I guess best wishes for the company. And one thing we didn't cover was this. Yeah, I just remembered cash flow. So in fiscal year 2023, cash from operating activity was 4.5 crores, 1.12 crores, unfortunately minus 29 crores of operating cash flows. They are in an expansionary state, but yeah, not the best record. Let us see how their cash flows are in the future.